Hey guys, my name is Kenny and I'm one of the analysts here at Trade Tips. On the last videos, we were talking about the Bollinger Bands and the exponential moving averages. And today we're going to be talking about the RSI or the Relative Strength Index and the stochastics to help find us reversal zones or oversold or overbought conditions. And we'll be talking more about that in the video. So we did talk a lot about the exponential moving average and the Bollinger Bands, and what we're going to do is just hide these real quick so we can go and see how to use the next indicator. So on the top, we're going to go click the FX button, type in RSI or the Relative Strength Index, and that should pop for us this new indicator in the bottom. Now the RSI is a oscillator. So as the market moves in waves, goes up and down, so does this oscillator. But this oscillator can actually tell us when things are overbought or oversold. And what does that mean? So if people keep buying, then we call that being overly bought or overbought conditions. And if things are overly bought, then things need to go back to equilibrium. So we can see here that that the RSI is 71.81. So we go ahead and look at that number right there. And in general, if you hit 70 or higher in the RSI, that tells you overbought conditions. So we expect the price to go downward. So, we'd see something like this in the near term. Opposite is true if we're looking at oversold conditions. So if we ever get price that goes down to 30 or lower in the RSI, then we should expect a bounce up, and then we would see a bounce up in price. So these are nice for telling us overbought or oversold conditions. In general, what I find with the RSI is it doesn't seem to really give too many signals. And it looks like anytime it's in between the 70 and the 30, and it's usually just noise. And what I find, it doesn't really tell you too much about momentum, or it gives you too many false signals, and it's harder to find high probability trades with just this RSI. I did find that they work best in the 2-hour or the 1-hour spot, just because things are usually oversold and or overbought and then corrected within the day. And so so you can see right here, if we get oversold condition here, we get the nice pop up. We did have another oversold condition here where we got a nice pop, and although this is nice for determining oversold or overbought conditions, there's actually another way that people use RSI, and it does provide some really high quality signals, and that's called the RSI divergence. Now divergence, okay, so what does it mean? So if we can look at the price going here, it's going downward. So if the price is going downward, we expect the oscillator to also be going downward. But look over here. We see that as the price is going downward, we're actually starting to produce an upward RSI here, and that's called a positive RSI divergence. Usually these provide high quality signals as far as reversal zones go. So if we went ahead and went ahead and just kind of looked back in time, kind of saw how that trade would happen, we can see that the RSI is starting to bounce here while the price is actually still dipping more. And if we combine that with maybe a trend line where we said, hey, you know what, looks like the trend is going down this way, and like maybe we'll go down to the 1-hourly chart and break it down here. Maybe what you can do is like you set up maybe a trend line and said, hey, you know what, I expect price to reverse here. Maybe I'm gonna go ahead and buy it to see if we get a break of this trend line in this case. So just gonna paint that a little bit better for you guys. So maybe I'm gonna look for a breakout in here to see if it's actually true that the RSI is actually giving us a good signal. And this would be our buy zone, is if we create this trend line and we go ahead and buy it on the break. So we can actually find another reversal zone here. Let's look for something that's a little bit more oversold and see if we can find something. So we can see that at least in here where price is going upward, we expect the RSI to keep going up. Oh, but it's actually starting to hit overbought conditions here. And as we're going upward, it looks like our RSI is starting to flatten, and that's when we can call it negative divergences. Usually you see it more prominently if it's actually doing something like this, but even if it's flat while the price is going up, that can tell us that the price is about to reverse soon. And look, if we can see that as soon as we did that double top on the RSI, it started to move down in price. You can see that this was actually a good signal for us, because if we went to go ahead and went short, then we could have made money on the way going down for us. So although these are all nice, I like the RSI, but I think we can do better. So this is why we actually started using more of the stochastic. And so we're going to go ahead and take this off here by just clicking the remove button. Go on the top and go on the top and type in stochastic. And we find that the stochastic RSI function has been really, it's done really well for us. And it's almost the same thing, except you'll actually see two lines, and you don't need to worry too much about it. It's just the same concept as the RSI, whereas if the price is above the 70, or if the stochastic is above the 70, then it's overbought, and if it's under 30, then it's going to be oversold. And what I find is that, especially here on these charts, we start to see a lot more high quality signals, in my opinion, for when we start to see reversals. And I don't need to use as much of the divergence tactic, as I can just literally look to see, is it overbought or oversold. Like over here, we can see, if you look on the cursor above, we got an overbought signal that told us, hey, price is going to go down, and look, price ended up going down. And then we got an oversold signal, and that told us price needs to go up, and the price went up. And again, here again, when we had the overbought signal in here saying it's going to go down, we know we actually had price go down. And I find so that this is it provides a lot more quality signals. Like in the RSI, we only had probably 2 signals. Over here, we already probably managed to find 4 or 5 signals telling us, hey, look, we have an oversold condition, and look, price, and we expect price to go up, so price is going to go up. And then let's fast forward to today. We have another overbought signal here, which we think, so it's saying that we should probably expect price to go down, and that's why I say, hey, don't enter any swing longs. We expect price to move down, in which case we'll find another entry for long plays once we hit a stochastic under 30. This can be done on multiple charts. Let's go ahead and just look at Tesla. And especially if you go over here, again, overbought signal telling us price is going to reverse, in which case price did reverse down. Oversold. We expect price to move up, and it does. So again, a beautiful, beautiful, beautiful little indicator here. And when used properly with the Bollinger Bands, you can kind of create some really cool trading opportunities. Let's go ahead and just, for example, look at this condition right here where the price is oversold. I can actually do with the premium. We can use bar replay, which kind of helps us kind of practice our skills a little bit. And I want to guys show you a little bit of how maybe I kind of do some quick day trades. Is I'll look for I'll try to look for those oversold or overbought conditions and maybe the hourly chart. Go ahead and click play, and you might start to see something in here where, okay, I'm going to look for some oversold conditions. Okay, I usually like to see oversold with a big oversold conditions with a big drop down. And maybe what I can do is I can combine this with one of the things that we learned before, which is the Bollinger Bands. And it says, okay, well, that's nice, but it looks like although it's oversold, I can actually get more oversold. So let's go ahead and see if we can maybe look for an opportunity where the price gets deeper into the Bollinger Bands. Oh, I like that. With oversold conditions. This could be an initial entry right here. So let's just say that we get into initial entry right there. And my target is, hey, I want to go ahead and sell it when it hits to that middle Bollinger Band. In the last video, we talked about how that middle line is actually the 20 EMA. So I'm going to be looking to see if we can sell in here. And so if it dips more, then I'm going to go ahead and buy a second contract. Okay, there's a good dip there, and there's probably the second dip where I would probably want to start to consider an entry. And especially because we have oversold conditions, this could be a potential second entry zone. Let's see if we can get any more. Otherwise, I'd probably get one contract here if I would like. And there you go. That's where I'd probably go ahead and pick up my second one. And if we go ahead and fast forward to this, and let's go ahead and see if we can enter in the trade, and we're going to sell once it hits that middle Bollinger Band. Okay, it looks like price corrects a little bit. I expect price to kind of move up from here. We have the stochastics moving up, and let's see if we can go ahead and hit that Bollinger Band. And there we go. In the middle of that candle, in the 30-minute candle, we would have been able to make a good profit off of this, especially when you're playing with options. This could have been an easy about 30% trade for me, considering that I bought an entry here and an entry here. And if I sold right at the Bollinger Bands, because I'm looking to day trade this, so I'm like on my computer, then I can be able to look for opportunity where my cost average would probably be down here. And we sell it from buy at 632, sell it at 646. That is some of the ways that I day trade some of these opportunities. So with that being said, I'm super excited to show you some of the behind the scenes on how we look for trading opportunities. If you guys want to get into the premium membership for TradingView, we highly suggest it. We'll probably put a link down below so you guys can get some extra benefits or a discount on the TradingView. But it allows you to do bar replay, and that kind of like helps you potentially just kind of get some more practice and seeing, okay, hey, if I wanted to do this before in the past, would it have worked in our chart? You can click to see the starting point, and then you can click fast forward, and you can kind of just watch the trade as it goes. And this is kind of like how I practice my trading. With that being said, if you guys have any questions, let us know in the comments below, and we'll see you guys in the next video. Peace out.